Who would have imagined Canadian house prices will be down by almost quarter in such a short period of time? Let's explore in this video what is going on with Canadian real estate right now. How come houses have lost almost quarter of their value from its peak in February? Will this real estate correction accelerate in the short term? My perspective where I see the house prices going forward and the million-dollar question, is it the right time to buy, sell, or wait? Hi, my name is Sunny and I make content that affect a common man financially. So let's dive into today's topic. Canadian houses down by 23%. If you're new to this channel, please subscribe to it alongside smashing that like button as that will help me with the YouTube algorithm, which of course will be highly appreciated. According to data compiled by Canadian Real Estate Association, for the fifth month in a row, Canada's average national home price is seeing a continuous decline. The average price of all types of residential properties in Canada fell to about $630,000 in July, which has declined significantly from their peak in February of about $816,000. When nationwide prices were going up, some areas of BC and Ontario have seen prices even going through the roof, making them almost unaffordable for a common Joe. Even such hot areas have come down substantially, but looking objectively, you still need over $1 million to buy a detached house, and that to an old one, which is still a lot of money to buy an asset class deemed essential. Like all good things in life, this real estate gold rush has come to a stop now. In fact, they have come down substantially from the times when people were fearful of missing out or simply called FOMO buying. If you compare house prices from its peak in early this year, they have come down by almost 23% on an average. In my limited wisdom, house prices in BC and Ontario are still unaffordable, hence they have to come down to more realistic levels so that people can live and enjoy their home ownership rather than worrying about making the next mortgage payments, which have stretched them financially. We all remember early this year when homes were flying off the markets with multiple offers, where outbidding each other was the norm that was defining any financial logic. The mad rush of owning a house as an investment came to an end when Bank of Canada had to start increasing their benchmark rates so that they can have a little more grip on rampant inflation, which is at a 40-year high. Early this year, banks were offering almost free money incentivizing you to buy a house at 1.5% mortgage rates. Right now, the same bank is reluctant to give you at about 4% mortgage rate, where you have to qualify at more than 7% based on the stress test. In my limited wisdom, inflation and rate hikes have changed financial dynamics of housing market in Canada, which is a good thing for long-term stability and sustainable growth in real estate. It's a common knowledge that people have been buying houses based on their rental incomes from basement suites, while homeowners had second jobs so that they can somehow manage mortgage payments while holding on to the property till next summer, where they can flip it for some profit. But right now, all this have changed in real estate as houses are not flying off the market as they used to be, rather are taking much longer to sell. Keep in mind, increasing bank rates alongside possible economic slowdown or even talk of recession has made people mindful of spending. On top of it, increase in benchmark rates by Bank of Canada is putting additional pressure on how much people can afford or qualify for, therefore the fall in real estate prices. I'm sure with much more rate hikes to come, this downtrend in house prices in Canada will continue for a while. According to some experts, it takes 12 to 18 months to have the real effect of rate hikes to trickle down, hence this downward trend will continue. Gone were the times when people used to buy a house to raise their family while enjoying home ownership where long-term appreciation comes as a package. Ultra low bank rates have allowed people to buy property for short term gain, which in my view is not a good sign for this asset class because it has inflated the prices to make them unaffordable now. Like meme stocks, people were buying houses in Canada as they were fearful of losing, where they could see prices move up every month. When the whole bank rate scenario changed because of inflation, some people were stuck with properties that they have bought at higher prices with an intention to flip this summer. Pure speculation, nothing else in my view. Personally, I would wait till all this bank rate tightening is over, then maybe buy something within my budget for long term, possibly next summer, because lot can and will change till that time. But that is me, I might be wrong. Do your own due diligence before investing based on your risk tolerance. As a disclaimer, I'm not a financial advisor, so please consult one before investing based on your personal financial situation. Now, if you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.